What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did have another bullish day in the stock market, closing at yet again brand new all-time highs. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY's price action going up 0.21% and getting right up to our next price target at 449, where it ultimately found resistance. So remember, 449 is one of those resistance levels I want you to pay attention to because it could lead to a stock market pullback, which could always turn into a stock market correction. If we break above 449, I have another critical level I want you to watch at 451, and that level will be critical as long as we can break and close over 449. So don't look too far ahead just yet, because right now we have to get above 449 to even worry about the next price target. 449 is going to be one of those critical targets that we could get a pullback from, and don't forget we still do have a gap to fill just below around 443.8. Now on the way to fill that gap, we could have support at the previous price target at 446, but our most critical support level is still going to be our 20 simple moving average in this strong bull trend, which is right at 443. So critical resistance is 449 and critical support is 443, even though we do have levels in between that we need to pay attention to. If we can start breaking and closing over 449, look for that 451 price target, which could lead to the next pullback. And above 451, it does look like SPY will start running towards 460. It's very possible SPY could get towards 460, so don't get overly bearish at these all-time highs, because as you've seen many times in this market, we get these small pullbacks and then we get these V-shaped recoveries back to brand new all-time highs. And we have to respect the fact that that proves this is a very strong bull market, and we see a lot of people buying the dip. Eventually that trend will end, but right now you need to be in the direction of the trend, which is still bullish, and the price action is still well above a positive sloping 5 EMA. So we have bullish price action with a bullish trend, so we need to remain bullish. Just be cautious the higher we go and start raising some cash. That way you won't get caught off guard in the next pullback, and you'll have some cash to put to work at lower prices. On the NASDAQ 100 triple Qs, we were pretty flat today, only going up 0.11%, and that's because we continue to close above the upper Bollinger Band. Remember, we need to see those Bollinger Bands to expand to allow the triple Qs to climb higher, because we are getting resistance from being outside the upper Bollinger Band. So don't look for too much breakout to the upside at these levels until we see these Bollinger Bands continue to expand. Our next price target is still just above at 376. So watch that level for a possibility of a pullback once we hit that price target. We still do have support at 370 and 369, and the gap close, which is right around where our 20 simple moving average is right around 368. So 368 is that critical support we need to stay above to stay in this bull market, and our critical resistance is the price target at 376. On the Dow Jones, we were up 0.12% today with price action above the 5 EMA, and we're still holding on to the bullish trend with the Dow Jones. The 20 simple moving average is crossing through that gap, so the strongest support level is still 352, but the gap won't close until we get to 351.8. We still have strong support just below that at 351, and overall we still see the three indices with bullish price action and bullish trending, so you still do have to realize this is a strong bull market, and you have to be objective, because as long as we have bull trends in all three indices, this market is still very strong and very bullish, and these bull markets do not die easily. On the Russell 2000, we were up 0.35% today, and we did see price action getting rejected at that previous daily high at 224. This is the second day in a row of the Russell 2000 closing back above the 50 EMA, and we are starting to see some of these moving averages crossing back over, which does mean we did lose the full bear trend. So right now, the Russell 2000 will be looking a lot more bullish if we can get a daily price action close above 224. That means we could have a quick trip to our next price target and resistance level at 227, and above that we could run to 230. Overall, the Russell 2000 is still in a very choppy sideways market, and we don't have a trend for the bears or the bulls, and we're really just chopping around, going nowhere in this trading range. So be cautious at these levels, because this is a strong resistance, and there's no guarantee we will break above it. So look for bears to try to short at that level, and the bulls to try to buy off support around 221, 220, 219, and below 219, it's likely we will close that gap at 216. So there's a ton of support below, but if those support levels start breaking down like they're not even there, look for that gap close at 216. If we break out of 224, things will be looking a lot more bullish, but we'll still have to play it day by day, because overall the Russell 2000 has really gone nowhere ever since it started going through this sideways consolidation. On the ARKK ETF, we were flat on the day, basically going nowhere, but the price action did close back over that 20 simple moving average and the 50 EMA. So that's the second day in a row above all the moving averages, so that is bullish price action. We're losing the bearish trending, and we did stop the ARKK ETF from going into the full bear trend, but we don't have a bull trend yet either. So look for a choppy market just like with the Russell 2000 with critical support at 120. Below 120, we have a gap to fill just above 119, and below that, there's another gap to fill around 116. So look for those gap fills as possible support if we do break below support at 120. To the upside, look for resistance at 123 and 125.6. On the VIX, we were down 2.5% today, and we see the VIX continuing to get crushed, and it's very likely we're coming back down to close that gap on the VIX at 15.7. That's also a support trend line, so that could be a very critical support level for the VIX, and we could see volatility coming back into this market once we get there. But right now, the VIX is well below all of our critical levels, which does favor brand new all-time highs. Remember, the VIX is a measure of fear, and we see the VIX heading lower, which means fear is leaving the market, which goes hand in hand with brand new all-time highs. We need to see the VIX spiking above 18.2 and above 20 to see a stock market correction. So if you start seeing the VIX climbing, that will be your early warning sign that we could be getting another pullback. On Bitcoin, we're currently up just over 2.3%, and we're back above the 5 EMA, and we still did hold on to that critical bull trend, so it looks like we're well on our way to the next price target at 51,000. Remember, above 51,000, we could climb all the way back up to 60K, and we could start flirting with brand new all-time highs in the Bitcoin space. So right now, watch that critical resistance at 51K, because if we break above it, that will be an extremely bullish price action breakthrough, and we already do have the full bull trend, so that'll be everything we need to know to see that Bitcoin is likely going to climb to new all-time highs this year. Watch that critical support at the 20 simple moving average right around 46,000, and below that we still have support at 45,000, and our 50 EMA and support level right around 43,000. On Amazon, we were down 0.2% today, and it still looks like this could be a dead cat bounce. Unfortunately for the Amazon bulls, we got rejected at that resistance level at 33.10, which does mean this could have just been a dead cat bounce and there's more downside coming. However, if we see the price action breaking above 33.10 and then testing resistance and breaking out above about 3400, that could mean this is no longer just a dead cat bounce and we're starting to reverse the bear market. But right now, Amazon is still in a full bear trend and getting rejected at resistance. And remember, in a bear market, you see lower lows and lower highs. And right now, this is still just a lower low and a lower high situation in Amazon. So there's nothing to get overly excited about after a dead cat bounce. So just be cautious at these levels. If Amazon can get back above 3,400, it will be looking a lot more bullish. Otherwise, watch for support at 3,280 and 3,208. On Tesla stock, we were up 0.38% today, and Tesla stock continues to get rejected at that resistance level right around 714.5. We need to see Tesla breaking out above that resistance to close the gap above at 732, and above 732, we could start running to the price target at 765. We're starting to get a really nice Bollinger Band squeeze here, so we could see a spurt of volatility coming in the very near future. So look to see if that burst of energy will fire to the upside or the downside. If we close that gap and keep running, it's very likely we regain the full bull trend and we see Tesla continue to climb. Overall, Tesla is still forming higher highs and higher lows, and it's very close to regaining the full bull trend, so we just need a price action breakout above resistance to really get the party started. To the downside, look for critical support at 700, and below that we have support at 692 and the 50 EMA at 678. Below the 50 EMA, it will look like Tesla is rolling over, and we could lose the higher low price action if we do break below about 665. So watch those critical support levels, because that will tell you Tesla is rolling over if we start to break down through those supports. On Apple stock, we were down 0.84% today, and we see Apple retesting some support just above our 20 simple moving average. Apple still has the full bull trend, so the bias is still to the upside, and the price action is still above critical support at 147.5. If Apple breaks below 147.5, it will start to look like it's rolling over and possibly could even lose the bull trend. If we break down below, look for support at 145 and the 50 EMA at 143, and below the 50 EMA, look for the gap close at 137. If we break out to the upside, look for a break above 151 to run to our price target at 156. Our price target on Apple remains 156 as long as we have this bullish trend. On the financial sector, we were up 1.18% today, and we continue to see bullish price action with the strong bull trend in the financial sector. The industrial sector was up 0.64% today, closing back above all the moving averages for the second day in a row and regaining the full bull trend. The healthcare sector was down 0.27% today, but it still does have the full bull trend. The energy sector was up 0.76% today and did close back above a 20 simple moving average. It's still on a full bear trend, but it could close back above the 50 EMA and start forming a bullish trend from here. So jumping back over to the S&P 500, remember that we're getting into very critical resistance at 449, and above that we have resistance just above at 451. Treat these resistance levels with the respect that they deserve, because the market is getting to some very critical price targets that could eventually lead to a critical stock market correction, or at a very minimum, at least a significant pullback to close the gap below. So watch critical support, because right now we still are in a strong bull trend. So as long as support is holding up, you want to still try to buy the dip and remain bullish. If you're staying objective in this market, you need to be a bull, because this is still a very strong bull market. Don't bother trying to call a top or shorting the market hoping you're catching the top. Just raise cash and get ready to deploy that cash at lower prices. Remember, this is a bull market, and this is not a market you want to try to call a top in, because it is a very strong bull trend. Eventually the trend will end and we will see the market roll over, but we're simply just not seeing that at this time. So just stay the course and remain objective. Remember that I also have my trade alert service that only trades TQQQs called BANC Trade Alerts, and it does very well in all market conditions, but exceptionally well in volatile markets. It's very likely we could be going into a huge spurt of volatility going into September, and I'm currently running a 50% off promotion for your first month of BANC Trade Alerts, so now could be the best time to try it out. If you're interested in trying out BANC Trade Alerts, you can find out how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.